Hello everyone, PS from PS Invest Plays here today. I have 10 stocks that are at the cusp of appreciating to a point where you can gain 30 to 50% returns by the end of 2021. There is an ETF that if you had invested $500 every month for the last 6 years, it would have given you 600% profits. What does the stimulus mean for the stock market? I have a stock market prediction for the end of 2021. The topics that we are discussing today, when I started editing them in one video, it was becoming a very long session. I have divided this into several parts. We'll name all the videos as individual parts so that it's easier for you to keep track. Also, I'll create a playlist and add clear descriptions on which part to watch for what component. So stick around. I think you'll like what I have in store for you today. Credit card stocks. As you can now see that there is a theme here. We are looking at banking and credit card stocks, financial stocks. Now, why do I think credit card stocks are going to give you those returns that I had mentioned earlier? They have extremely strong balance sheets. With the economic reopening and the CV vaccine and the ease of travel restrictions going into 2021, people are waiting to invest, to use their credit cards to travel, to spend their money. And who's going to gain from those? Credit card companies. People's usage, they're going to rake in a ton of fees. That helps them make more money. They give consistent dividends, and the stimulus package that was just passed and the additional talks for $2,000 to every individual, that puts more money in people's bank, should help people spend more money and in turn help these credit card stocks. These stocks have partially recovered, but they are still undervalued. And I expect them to give you 30 to 50% returns. Now, 20 to 30% is on the lower side. I definitely think that these should give you 30 to 50% returns. With that said, let's jump into their analysis. American Express. This one was trading at its peak at 136. Now, it has still not recovered by any means. It has missed last quarter earnings. American Express has been doing extremely well over the last decade. And for them to miss one quarter, I would not pay too much attention to it. Easing of travel restrictions, American Express should bounce back extremely strong. The price to earnings ratio is on the higher side compared to the industry average. So I would recommend that you buy on the dips. Anytime there is a pullback, keep buying this stock. The right price to buy American Express would be 110 or 105. I don't know if it's going to drop below that price, but if it does, pounce on it. Even after missing their earnings, they haven't cut the dividend, which is a very good sign. Even with the PE of 29, they're still undervalued, and the financial strength is extremely good. I think this stock can easily give you 30 to 40% return by the end of 2021. My price prediction for American Express would be around 200 or 210 by the end of 2021. Let's look at the next one on our list. Visa. So this one was trading around 213, or 217, which was its 52-week peak. It has recovered. Now look at its earnings. It has been doing consistently well even in this pandemic. I think this stock is going to give extremely good returns. Now, if you look at the PE, it's 44 compared to the industry average of 61. Now, Visa has been at the forefront of innovation. You can expect a 40% jump in this stock with the economic recovery, ease of travel restrictions, people spending more money with the stimulus, this stock will do extremely well in 2021. They haven't cut their dividends, which is a very good sign. They are still undervalued, and the financial strength is good. Their long-term sentiment is extremely bullish. This stock gets a big thumbs up for me. I think by the end of 2021, you can expect this stock to be trading at 320 to 335. Going on, MasterCard. For MasterCard, the stock price has recovered from its peak. It did miss its Q3 earning, which I would not pay too much attention into. It is a very stable company. It has been around for a very long time. It is the biggest competitor to Visa, and it is one of the biggest card processing companies. Their price to earning ratio is hovering around 52, which is lower than the industry average. Now, we have to also take into account that the industry average has reduced this year. In 2020, even the industry average has reduced. So the industry average should creep up considering the ramp up in demand of usage of credit cards. So with their consistent returns and consistent dividends and their undervaluation, we can clearly see that MasterCard is undervalued. Extremely good financials. This sentiment for short and long term is extremely bullish. I think this stock is undervalued, and you should consider adding into this stock on dips. My price target for MasterCard by the end of 2021 would be around 450 to 460. Moving on, DFS, Discover Financial Services. Now, these are the top dogs: American Express, Visa, MasterCard, and Discover. Discover did miss 2 of its earnings. Now, those could be attributed to pandemic. Now, think about Discover, that it is the smallest of the 4 credit card companies. So I would trade this stock with caution. I would do more due diligence. If you like it, you would want to build your position in it, but always buy this on dip. As I said, it is one of the smallest out of the 4 credit card companies that we just discussed. They are trading at a premium on price to earnings and still undervalued. So with the 5-year average, we can definitely see the stock jumping to at least 150, just so that it comes up to the industry average. Now, I'm not saying that every stock has to come up to the industry average. I mean, the industry average is created because there are some that are below the average, and then there are some that are above the average. Now, with Discover, the way I would trade it is that I would buy the stock around 75 to 80 or even 81 and keep dollar cost averaging on this stock. This way, I'm not missing out on the run-up. It has not cut its dividend, which is a very good sign. The financial strength of the stock is good. And they are also venturing into newer fields, such as creating apps like Acorn. So what do I think would be the price range that Discover Financial Services would be by the end of 2021? I think this stock can trade around 120 or 125. Now, when we look at the peak in February, which was around $90, since February earnings that they've had, it is not baked into this stock. And the future reopening of the economy, that should be a catalyst for this stock to jump up to 120 or 125. So I'm bullish on this stock, which is approximately a 50% gain.
All right, this concludes part 2 of our series.
Well, that's it for today. Thank you for watching. If you like this video, like, subscribe, and share this video with your friends and family. This helps me grow the channel and bring out this content out to you. Thank you for watching. See ya. Bye-bye.